the US oil spot, and what a tremendously profitable 24 hours we have here, as we currently have a minimum of 1, 2, 3, 4 and 5 positions running at this point in time with over, let's see how many pips that is. So the first position was triggered at the $77.40 area, which is currently running with over 260 pips in profit. We had the second position at the breakout of the $77.50 level, running with about 250 pips. So we have over 500 pips on those two positions, while the third one is running with over 200 pips. That's about 700 pips. And we have the fourth one here running with about 150. And then the third one is running with about 70 pips thereabouts. So we have close over 800 pips running in profit on the US oil spot. And for those of us who did capitalize on this opportunity, well done and kudos to you for being on standby to capitalize and of course maximize the potential of this bullish move. For educational purposes and for the sake of those who missed out on our earlier sessions, let's run through what really happened at the beginning of the week and what led to the decisions we made on this asset. So at the beginning of the week, it was more of a choppy market condition where price action was initially trapped within that range between the $77.40 level and the $76.80 area to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we have a range-bound structure like this, we exercise patience, waiting for market participants to finally make a decision, which will come either in the form of a breakdown of the support line of the range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. Now, with the situation here, we never saw price breakdown and retest the support line, so it was more of price trading around our key level and the resistance line of the range. That's between the $77.50 and the $77.40 area. So, and you will see that during the first half of the week, it was more of price triggering our position, coming back into break even before finally yesterday we saw the momentum continue to the upside. And for the fact that price still remains above our ascending trend line, we maintain a bullish bias, adding more position at all the levels we identified during our live session. And as it is right now, with over 800 pips in profit, it's high time we moved all our stop losses and secure the current buy position. And if you would ask me, I will suggest that anywhere below the $79.80 level and the fifth entry, that is the $79.40 area, seems most appropriate to move all our stop losses to. And always remember, while you move your stop losses, ensure you have enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying this asset, or are there chances that sellers could come in at any point in time today? Well, before we can go into making a well-informed trading decisions, it's important that we also understand the fundamentals which has been driving the sentiment in the market. Now, remember yesterday I was telling us that we shall be looking forward to the report from the U.S. Energy Information Administration, which showed a decrease of 1.536 million barrels in U.S. crude oil stocks for last week. And this result here came in below the expected 1.338 million barrel that was supposed to be recorded, and this marks the first decline in 7 weeks. Remember, we also saw a couple of days ago the API weekly crude oil stock, which also reported an unexpected decrease of 5.52 million barrels. And this for me is a very good sign that the demand is eating into the supply. So what this means is that demand is increasing in a rate that is much more higher than the rate at which supply is coming. And what this simply means is that when this situation is happening, our simple economics says that the higher the demand, the less the supply, the higher the demand, and this will result in higher prices. And this has been one of the major reasons why price has continued to find new highs in the last 24 hours. Besides this, we also have speculations that major central banks may cut borrowing costs, which could drive oil prices even higher. Now, remember, the Federal Reserve considers easing policy, which may result in the US dollar weakening and providing additional support for oil prices. This cannot also be ignored. Then yesterday, we also got concerns over potential supply disruption following Ukrainian attack on the Russian refinery, which also have bolstered oil prices at this point. Now, given this development, I'm of the opinion that price may continue to rise, but in what manner will price rise? Are we going to see a retracement of the current bullish momentum before price continues the rise, or will there be a significant situation where a sell-off will come in anytime today? Now, to go into the details here, and for the sake of those who missed out on our earlier sessions, let's run through the 4 hours time frame where our first point of contact was at the beginning of the week. Now, if you remember vividly, during our Monday session, we took into consideration the character of price action since the beginning of the month of February. And when we did this, we can see that the market has been very bullish. And after connecting the series of higher lows, we have an ascending trend line to work with. You know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying the asset. However, something interesting happened last week Friday, as we saw that in the last 4 weeks, we saw price action break down the ascending trend line for the first time. And this incited some bearish opportunity for us. And at this point, we were beginning to consider the beginning of a downtrend move. And in that regard, we did emphasize here yesterday that if the bullish momentum continues above our key level at the $77.50 area, as soon as price gets into the trend line, we want to ensure that all stop losses are moved accordingly, securing the positions with the hopes of seeing how the market will react to that trend line. And that if selling pressure persists, we may be seeing the continuation of a downtrend, which never happened. As we saw, price climb back above the ascending trend line, giving us a good signal to continue the uptrend. Now, with the situation now, price is back above the ascending trend line, so we are within the buyer's territory. And at this juncture, it makes a lot of sense we continue to look out for more opportunities to buy this asset. Now, the question now going into today's session is, how are we going to see price drop maybe back into the trend line in an attempt to continue the uptrend? Or are we just going to see on the 1 hour time frame our ascending trend lines from the second day of this week is still very much intact? Remember that we had a couple of ascending trend line identified here, and we have been using this ascending trend line to guide our bullish idea since the new week began. Now, with the situation here, price remains above our ascending trend line, so we shall feel comfortable in a buy position. Now, if we begin to see selling pressure at any point in time today, we shouldn't panic or get anxious at all, as this may still be a retracement back into any of this ascending trend line to continue the uptrend move. So if price drops, we shall still be looking out for patterns and structures within this ascending trend line to continue the uptrend. So we'll look out for reversal patterns like double bottom structures, head and shoulder patterns, or even falling wedge. Then mark out the neckline and then buy the breakout of the neckline. However, If price action does not do this, that is, it does not drop into the trend line and instead continues to find new highs, then we are looking at adding more buy positions at the breakout of the $80.30 level, which happens to be the highest point price action has been for this year. So let's see how the market is going to play out. This is my bullish bias on this asset. However, if it so happens today that price break down this ascending trend line, which I doubt if it will happen, but if it does happen, a breakdown retest of the structure should be all we need to join a downtrend continuation. So we will be looking at below the $79.40 level for selling opportunities in this market. So let's see how the market will play out for today. I encourage you to mark out these levels, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on this asset. If you have any questions whatsoever, feel free to let me know in the comment section.